Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Friday the market took a stab to the downside and rejected the region of 67, 70, 80 area. From the rejection, the market's not quite out of that zone for another re-challenge. However, the market needs to hold here, otherwise we could see further losses for the Australian dollar and look down towards the region of 66.5 cents if it fails to hold at 67.70. Looking ahead to this week, market eyes will be closely watching the announcement of the RBA monetary policy due out Tuesday at 2:30. The Reserve Bank of Australia is all but certain to raise interest rates on Tuesday to attempt to slow the acceleration of inflation. The RBA is expected to announce a conservative 50 basis point rate hike in its monetary policy. This will see official rates elevate to 1.35%. Besides the RBA this week, market participants will also be looking to the second quarter earnings in the US and also the US Labor Department June employment report. The closely watched US job report due out on Friday is expected to show the world's largest economy adding 275,000 jobs to the non-farm payrolls. Along with that, the US Federal Reserve monetary policy meeting is expected later in July as well. So looking at the technicals, you can see that the Australian dollar is getting close to the overzone. So as long as we maintain, as I mentioned, above that 67, 70, 80 area, then we could see a retracement back towards the top side around the region of 68.80 to 69 cents. The euro also took a stab to the downside, but didn't quite reach the 103.45, but it did take out the level of 104.10, but eventually rebounded and closed above that level on Friday. If the momentum can hold, then we could see a further rise, that is towards 104.75.85, and reassess from this region. The dollar yen, since taking out the trend last week, is somewhat weak in light of the RSI and the MACD married to a negative bias, should eventually see the market tumble towards the region of 133.70.90 and reassess from there. Still be on your guard though, as the market doesn't like to be too short when it gets to that bottom side of the range, as we've previously seen back in June. Nevertheless, I feel the market still, from the last three bearish candles here, that could see a further extension to the downside. Bit of a whipsaw price action for sterling, and as you can see, the market recently respected that area around 119. In light of the price action on Friday, the break of 121.10 wasn't clearly concluded, as the market did reject in front of this region. Let's see if the market can continue on, and if so, a clearance of around 121.65.75 could give further upside momentum to the challenge around 122.95 to 123 as this downtrend line slowly declines. Sterling CAD took a stab at the bottom side of the range, seen around 155. In light of the rejection here, we can see that the market from 155.20 has held as previously seen. There is a bit of divergence in the RSI, so let's see if the market does snap to the upside and look towards 156 to 157.25. A relatively strong candlestick seen in gold, that is a hammer. The market did take the challenge down towards that key level of 1,788.92 on Friday and clearly rejected it. In light of the pattern though, the ADX is still strong, but if this hammer can be more convincing to the market to support a bullish rise, we still need to clear the region of around that's seen now at 1,819, and if seen, could see further guidance to the upside. A lot of work to do to the upside, but I quite like the way this hammer has come through, and it is relatively bullish. So let's see if the market can react upon this candle and take further guidance to the upside. Finishing up with oil, well, the market was a little bit whipsawed also after it took a stab towards the bottom side of this range here around 103 or 102.80, and now regained momentum back towards the top side with the resistance capping at this present stage at 107.65. Technicals are still weak, So as long as we maintain under 107 figure 65, then we could see another down test towards this bottom side of the range at 102. Well, that wraps it for the start of this week. However, please keep an eye out for the intraday report and also the end of the day wrap.